How's it going, Mullenites? I hope you're all doing really well and enjoying your weekend. So, just a bit of a recap of the week and looking ahead. The situation at Mullen Automotive continues to worsen as the company has now plummeted to just 27 cents per share as per Friday, marking the 11th consecutive day below the critical $1 threshold. And over the past 5 trading days alone, Mullen stock has lost a staggering 54% of its value, and the prospects are looking increasingly bleak for this once promising EV manufacturer. So I've covered it a little bit before, but let's dive into what's been happening and why things are unraveling so quickly. First and foremost, the recent performance of Mullen's stock is a clear reflection of investor sentiment. The market is reacting sharply to a combination of factors, most notably the company's dwindling financial resources, the looming threat of delisting from the Nasdaq, and the massive dilution that has taken place in recent months and is hanging over the company's head. Mullen Automotive's market capitalization now stands at just $10.93 million, which is a far cry from where it once was. To put this in perspective, Mullen's stock price has been decimated by over 70% in the past week, basically since it started trading below $1. And the dilution of shares has played a significant role in this decline. So in the last quarter alone, Mullen created approximately 16 million new shares, bringing the total float to around 40.5 million shares. One of the primary drivers of this increase has been stock-based compensation, a practice where the company issues shares to executives and employees as a form of compensation. While this can be a useful tool to incentivize and retain talent, it also has the effect of diluting the value of existing shares, especially when a company is already struggling. Now, let's talk about the impact of this dilution. If you don't quite understand it, when a company like Mullen is trading at such a low price, issuing more shares to compensate the executives not only increases the total number of shares outstanding, but also puts additional downward pressure on the stock price. Essentially, each time new shares are issued, the pie is being divided into more pieces, meaning each individual share becomes less valuable. For existing shareholders, this is a significant concern because it means their ownership stake in the company is being diluted without any corresponding increase in the company's value. And if you look at the most recent financials, the amount of stock-based compensation totaled around $29 million. This situation is particularly troubling given the financial state of Mullen Automotive. According to the company's most recent earnings report, their cash reserves have dwindled to just $4 million, down from $155.7 million at the end of September 2023. With such a small amount of cash on hand, and mounting expenses, Mullen is likely going to need to raise more capital to stay afloat. However, given the current state of their market price, any additional capital raises will likely come in the form of further equity dilution, making the problem even worse. What's more, Mullen has filed to resell up to 85 million shares, which could be triggered by conversion of notes and the exercise of warrants. If these shares are issued, the current share count would more than quadruple, double now at this point, triple I should say, leading to even more severe dilution. This would be catastrophic blow to existing shareholders who have already seen their investments decimated over the past year. The threat of delisting from the Nasdaq is another critical issue. With Mullen's stock trading below $1 for 11 consecutive days, or trading days I should say, the company is running out of time to regain compliance with the Nasdaq listing requirements. If Mullen fails to get the stock back above $1, it could be forced to conduct yet another reverse stock split to avoid being delisted. However, as we've seen in the past, reverse stock splits are often a temporary fix that don't address the underlying problems facing the company. And if the company does indeed go down this route, it looks like they would have to get shareholder approval. But given the main shareholders are the people who hold these warrants, I think they would very easily get the approval for such a matter. So let's also not forget the broader context of the EV market. While there's no doubt that the electric vehicle space holds tremendous potential, competition is fierce, and Mullen is up against some very well-capitalized and established players. The company's ability to compete effectively is severely hampered by its current financial situation, and without significant improvements, it's hard to see how Mullen can emerge as a serious contender in this space. So where does this leave us? For current shareholders, the situation is grim. The stock's continued decline combined with the ongoing dilution and the looming threat of delisting, paints a very bleak picture. For potential investors, Mullen presents a highly risky proposition, one that's fraught with uncertainty and downside potential. While one can make the point that yes, the company is now starting to receive revenue and they could be starting to turn a corner, objectively, where things stand at the moment, it looks very, very bleak. Therefore, it's a very risky stock to be looking at. In conclusion, Mullen Automotive is facing a critical juncture. The company's leadership needs to take decisive action to stabilize the stock, restore investor confidence, and find a way to reverse this downward spiral. However, given the current trajectory, it's becoming increasingly difficult to see a clear path forward, which isn't going to hurt shareholders even further than they already have been. The next few weeks and months will be, or particularly works, I should say, will be crucial, and all eyes will be on Mullen to see if they can pull off a bit of a turnaround with their stock price, or if they will continue to slide into obscurity and indeed be delisted. Anyway, share your thoughts on it all in the comments below. I love hearing from you guys. I hope you're all doing really well, and until next time, may the markets trade in your favor. Cheers.